Hello everyone. So today's topic is interest on drawings. Now, what is interest on drawings, or what do you mean by drawings? Let us go and have a quick look on the meaning of drawings and interest on drawings. Drawings. Amount withdrawn by partner in cash or kind for domestic use. Domestic means personal use. The amount which has been withdrawn by the partners for the personal use is known as drawings. Now, drawings out of capital and drawings out of profit, I have already taught this in the previous videos. Interest on drawings. Interest is charged on such drawings from the partners. The drawings which I have mentioned earlier, interest is charged on these drawings from the partners. Now the important thing you need to know is interest on drawings. It is an income for the firm. For the partnership firm, interest on drawing is an income. And it is an expense, or you can say losses, for the partners because they have to pay it. If it is income for the firm, then it will be shown on the credit side of profit and loss account. Remember, in profit and loss account, there was one item on the credit side named as by profit and loss account or by net profit. And the other item is by interest on drawings, because it is the only income which is extracted from the partners and is shown in profit and loss appropriation account. If it is an expense for partners, so they have to pay it, their capital will be deducted, shown on the debit side of partners' capital. Now you must know that if capital is increased, it is credited, and if it is decreased, it is debited. Why so? Because capital is of liability nature. Capital is a liability towards the firm. Now, what exactly is drawings? You know that. But the actual nature of drawing is that it is a type of loan provided to the partners by the firm. Don't catch my words. Only I want to explain you that it is a type of a loan provided by the firm to the partners. And in return, firm charge interest on drawings from the partners. Okay. Now, formula for interest on drawings. Interest on drawings. For any type of interest, the formula is simple. Amount into rate upon 100 into average period upon 12. Now, in this case, amount. Drawings. We are talking about drawings. Therefore, amount of drawings, or we can say total drawings into rate upon 100 into average period upon 12. Now, if a person withdraws 1000 per month, then total amount of drawings would be into 12. That is for 12 months. But as for now, we will be discussing cases which are related to one-time withdrawal. There are three cases which are related to one-time withdrawal. Let us have a close look at these cases. One-time withdrawal. Case 1. When the amount is withdrawn during the year. You have to be very careful about during the year. Very important case, when the amount is withdrawn during the year. Let us understand by an example. For example, if Nitesh, a partner, has drawn 10,000 during the year 1920, during the year, we don't know the exact date or exact number of times Nitesh has withdrawn. So in this case, interest is charged at the rate of 10% per annum. Solution will be interest on Nitesh's drawings will be amount. Now in a question of 3 marks, there will be half marks or 1 marks for quoting the formula. The formula is amount of drawings into rate is 10% per annum, and the average period will be 6 months, because we will give a benefit of doubt to the partner as we don't know the exact amount when the partner has made drawings. Therefore, the answer will be 500 rupees. Now case second. When the rate of interest is not given for per annum, there will be a question. Everything will be same, but at the end of the rate there won't be any per annum. Like for example 2, if Shivani, a partner, has drawn 10,000 on 1st of October 2020, when interest is charged at the rate of 10%. Now interest is charged for 10%, but nothing is written about per annum. Now what to do? Now in this case, solution second. Interest on Shivani's drawings. Now amount of drawings is 10,000. Rate is again 10%, but not per annum. Per annum, if not given in question, means you don't have to bother about the time period. Even if we calculate from October, November, December, January, February, March, we should charge him for 6 months. But if per annum is not written, in that case you have to charge it for full year. That means you should not consider writing average period in this type of cases. Now the answer is straightforward. Now these two are very important for board exam 1 marker questions, whether it is objective or whether it is fill in the blanks type or simple indirect question. Now case 3. In case 3, amount are withdrawn with regard to period, time period. Now time period is very crucial in these type of questions which are related to interest or commission or salary. Let us have a close look. When the amount is withdrawn in respect of time, Example 3 will make you clear the whole concept. If Adbud, a partner, has drawn 10,000 on the 1st of May 2020. Now, in this case, what will be the solution? Interest on Adbud's drawings. Now Adbud had drawn 10,000. Rate is 10%. But Adbud has drawn on 1st of May. Exclude April from the year. Now we have 11 months. May, June, July, August, September, October, November, December, January, February and March. 11 by 12 months. Average period comes to 11 upon 12. Now in this case answer will be okay. Now solution to question 4. To make you clear the whole concept, I have given 2 questions. There is not a big difference between these questions, but you have to understand the keywords which I am been using. Like in first case during the year, in second per annum will be missing, and in third time. If Honey, a partner, has drawn 10,000 on 15th of August 2020, solution 4. Interest on Honey's drawings will be 10,000 into 10 upon 100 into. Now let us calculate. Half month of August, September, October, November, December, January, February, March. Okay, 7.5 months. 7.5 months. How? Half month of August. After August, September, October, November, December, January, February, March. Now 7.5. 7.5 upon 12. The answer will be 625 rupees. Now I hope you have understand the cases which are for one-time withdrawals. These cases are for one-time withdrawals.